Thanks very much, Phil. And the U.S. economy relies very heavily on consumer spending. As you know, it accounts for about 70% or two-thirds of U.S. GDP. But there are fears that changes to taxes may now discourage consumers at a time when the economy is still trying to recover. We had the retail sales data for January come out today, and Karina Huber has all the details of that report.
U.S. consumers spent less money in January than they did the previous 2 months. Retail sales grew at 0.1%, down from 0.5% a month earlier and 0.3% in November. The reasons cited for the slowdown? Smaller paychecks, thanks to the expiration of a 2% payroll tax cut. Economists say the increase in taxes amounts to $120 billion in lost purchasing power.
The payroll tax increase hurts the low-income worker. Low-income workers basically spend all of their income, and so now they have less income to spend, and they're going to have to make choices on what they're going to buy and what they're not.
What they cut back on was clothing and furniture. What continued to rise despite the higher taxes was building materials, probably due to reconstruction work after Hurricane Sandy, as well as sporting goods and electronics. The biggest impact appears to have been on restaurants and bars, where sales were flat. Economist Carrie Leahy says many Americans dipped into their savings in January to make up for smaller paychecks. That's why retail sales didn't change dramatically.
The worst thing for the U.S. economy would have been if Homer and Marge had decided not to go to the mall. What they did is they went to the mall. They just spent about a third less than they would have normally.
Tax rates have also risen on wealthier Americans who have also been impacted by an increase in capital gains and dividend rates. But Leahy says there are no signs yet of a change in spending habits in that income bracket.
I haven't heard any stories of people at Ferrari dealerships or at Hermes Bags having difficulties in the last month, but that's where you'd see it if it were happening.
Most economists believe the impact of the higher tax rates will be felt in the months to come, but they don't expect a dramatic pullback in spending. That's partially because home values are rising and the stock market continues to march higher. Karina Huber, CCTV, New York.